You're entering CNBC-TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Welcome back. Union Bank of India is on our radar. On the back of their fourth quarter numbers, the bank has clocked its best profit in 5 years, boosted by lower provisions, and provisions are still high at about 81%. Further, high write-offs, of course, have also aided asset quality this quarter. Rajkiran Rai, Managing Director and CEO of Union Bank of India, joins us now. Thank you very much, Mr. Rai, for joining us. Well, as my colleague Abhishek was pointing out, not often after mergers of so many banks does the mother bank report such a tidy profit. So congratulations on that. But now for a little more granular details. You all announced that your slippages are about 14,600 crores. This, of course, does not include the second round of COVID. How bad is that for you? And can you give any guidance for the trouble that the bank may face in the year ahead?
Actually, we have given a full year guidance for this year of delinquency of 2.5, okay. Which is slightly lower than the slippage of last year, but close to that number, which factors in the likely slippages because of the second wave of COVID. Okay. But then I don't foresee like a bigger damage because of the second wave on the bank book as of now, because this was very short-lived and things are coming back to normalcy pretty quickly. So we hope to cover up, because last time it was pretty bad because the lockdown was quite long. So it took time to come back, but then this time around we don't foresee much damage. But then we have factored in some slippages because of the second wave.
Okay, and now let me come to the restructured book. It is about 6,000 crores for you, 6,500 crores, you said, compared to 3,200 crores in the previous quarter, that's Q3. Now, the Reserve Bank has allowed more restructuring, that is, you can go up to 50 crore along with another 10% credit from ECLGS. How much do you think will be that restructuring amount?
Difficult to put a number, because actually it will again, last time we also had the corporates in the restructuring. Okay. This time the corporates are not there, it is only up to 50 crores. So this basically consists of retail, small businesses and MSME. It's very difficult to predict the customer behavior, because last time around it came very, very low compared to our expectations. So this time also we have to wait and see. At this point of time, we have just launched these products, restructuring schemes, and the branches are in process of contacting the borrowers. So maybe it will take one more month for us to predict the numbers. But I expect that this may be in line with the last time numbers, may not be more than that.
Okay. Mr. Rai, good morning. My colleague Ritu just put out a story about the sale of legacy NPAs that will be transferred. 22 identified legacy NPAs will be transferred to the NARCL. I wanted to ask you that how much will Union Bank, or is Union Bank intending to sell in terms of NPAs, say over the next few quarters?
See, I would like to clarify here. As a precursor of formation of the NARCL, the banks have taken some steps to identify the potential accounts which can be offered to NARCL for buying. So ultimate buying will be decided by the NARCL management, that board, once it is formed. So this is very preliminary discussions going on. Yes, actually in the first stage, we have gone through the NPAs what we have. And we have asked the lead banks to call for the meetings and identify the accounts and get a preliminary approval. So these numbers, what we are talking about, is coming from that list actually. So Union Bank has about 7,800 crores of NPAs, which can be offered to ARC. But it's subject to ultimately the formation of ARC and the offer from the ARC to finally buy out this book.
What will you all recover at all from this? Because look at the kind of names over there. You have Amtech Auto. It's been around there for some time now. Castex Technology, which is again a group company. It was originally Amtech India Limited. And then you have Visa Steel. How much do you expect to recover from some of these stocks? GTL, GTL has been there for some time now in terms of a bad asset. That's about 3,300 crore. So what do you expect to recover from that 7,800 crore that you're transferring?
See, our expectation of recovery is something between 20 to 25%. So that is the call on general. Some cases it may go down, some cases it may go up, but then on an average, about 25% can be expected on the recovery side. And see, the biggest challenge we faced in all these accounts is the debt aggregation. So NARCL is going to address that issue because all the debt is going to get aggregated at one point, and we are also proposing a asset management company which is to be proportionally managed will be constituted. So we may also look at ways of resolving these cases by trying to find good buyers even out of NCLT and many other processes which are there, because the negotiation at AMC level with the full debt under them actually will be much better, and the buyers may be also interested in many of these assets when they don't have to go and deal with the 10 different banks.
Yeah. You've taken a fairly sizable write-off of 10,000 crore, which has clearly helped a lot of the ratios. How old is what is the average age of these loans? Are they very old loans?
Mostly yes, because it generally takes about 3-4 years for any account to reach 100% provisioning level.
Okay.
So technical write-offs happen only after the full provision. So you can safely assume that these are 4-5 year or more aged NPAs which we have written off, and it is basically a balance sheet adjustment we do. Actually, most of these accounts are under different resolution processes, actually under NCLT or other processes. So it is only for the balance sheet adjustment, because see, with the NPA, net NPA at 4.6 and provision coverage of 81%, so we can afford to write off, technically write off accounts so that our gross NPA also comes below 10%. But then we have to take a balanced call, because whenever we technically write off, my credit growth also is impacted. So it's a balanced call for a period of time we have to take.
What is the extent of recoveries you are expecting this year? From everything, ARC, from your own one-time settlement or whatever, other recoveries?
See, this year, our total recoveries, including recovery in write-off account, was 10,800 crores. For the next year, our target is 13,000 crores. Out of that, 4,000 crores we are expecting from NCLT, and 9,000 crores is from the non-NCLT cases. This is the target we are having, and we are confident that we can achieve.
Recoveries alone is 13,000 crore, your expectation?
Yeah, this year we had done 10,800 despite the COVID and other impact. But then that includes upgradations and also the recovery in write-off account.
Got it.
Okay, yeah, all right. So that is on recoveries and upgradations. So I wanted just a few more details, on what the situation as far as loan growth is concerned. I know it's been very challenging for the industry up until now, but any kind of expectations on what the first half of FY22 would look like?
Yeah, actually, see, half of our book, more than half, that is the RAM sector, about 56-57%, is growing around 7-8%. Out of that, the retail and agriculture is definitely growing at double digit. So it is growing around double digits. So that book is behaving okay, and that will give the push on the credit growth side. So this year we had the impact on the corporate credit growth, which is negative, which is pulling down our credit growth numbers. But this year again, we expect that our agriculture and retail growth will be in double digits, and that will definitely help us for the credit growth. We have given a projection of 8 to 10% credit growth for this year.
If you can give some numbers, I know you gave an overall slippage ratio, sir, and I believe your annualized credit cost for last year was 2.88%, right? Your NPA provisions were 4,712 crore in the last report. How much might this go up by?
The credit cost will come down actually, because
the percentage will come down. Yeah, how much?
Yeah. The credit cost is expected to be around 2. Actually, the aging provisions are coming down substantially, because all the legacy NPAs are almost fully provided. See, we have almost 80,000 crores of accounts under different stages of resolution.
So in terms of numbers, how much will that be if you say 2%? I'm just trying to get an approximate number.
Yeah. That is between 12 to 13,000 crores.
Okay, will be the provisions.
Yes.
Okay, sir. And you expect margins to continue to be under pressure?
Not so, because net interest margin is around 2.71 this year. So next year we expect the NIM to go up to 2.9 to 3. So the interest rate scenario is quite stable and it is likely to continue like this for some time. So we expect the margins to slightly improve because of some of the steps we are taking. So the operating profit has stabilized around 5,000 plus crores per quarter. So this year our operating profit was around 19,200. We are assuming a 10% growth in operating profit. Less the credit cost, I think we have good margins for the net profit to go up.
A final question to you, Mr. Rai. You know, now that you have 3-4 banks under your fold, you're bound to have duplicate branches in several streets and cities. As well, there is a substantial improvement in net banking because of COVID, and even otherwise, people are used to banking without having to come to the branch. Isn't there an OPEX that you will save? Is there a number in mind?
Definitely, yes. Actually, like about 750 branches are marked for closure, or like, because these are, as you rightly said, in the same road within half kilometer, 1 kilometer radius, that kind of branches. Out of that, about 400 branches are in a different level of closure. If you look at my branch numbers, you can see more than 200 branches are already down actually from the total number over last March. So I think this is a process and this will save about 750 crores in cost.
Okay. All right, we leave it at that for the moment. Mr. Rai, when is the next step on the NARC? When will we hear it being constituted?
Yeah, it is in the advanced stage actually. At this point of time, there's a discussion about the equity structure and the board structure. So, but we need to go and register this and get the necessary approvals from the regulator for starting the company. But then it can happen pretty quickly.
Okay. All right, we leave it at that. Thank you very much, Mr. Rai, for joining us with your thoughts today. Okay, so that's the word coming from Union Bank. We should see, I think, in all these banks, a lot of savings on OPEX as well as they rationalize their branches. But at the moment, the market is in a mood of profit taking.
Oh, it is, and quite a bit. The bank Nifty is now down 400 points. In fact, even the Nifty, which was holding on, is now beginning to see a bit of a decline, just about 0.5%. So some profit clearly being taken off the table. Metals, JSW Steel, Hindalco, Tata Steel are your top losers now. Adani Ports, which had a big rally yesterday, is also seeing some profit taking. Mitesh Thakkar is back with us. Mitesh, morning again. So what have you made of the first hour and what would be your stock calls now?
Yeah, good morning. So the first hour, I think, very subdued, kind of some profit booking happening. And as I said, I think, 15,650, 15,660, I think is the support area. So we're close to that. We'll see how it reacts there. But the momentum remains with technology stocks. And we were talking about IT stocks early in the day. In fact, I have 2 buy calls over there. I think that's one sector where I would be comfortable taking or trading on the long side. A buy on HCL Tech with a stop at 950 for targets of 985, and Infi is a buy with a stop below 1390 for targets of 1435.
Okay, Mitesh, thanks a lot for all those trading ideas. So that's a couple of ideas. Infosys clearly has been one of the stocks of the morning on the upside. But let's talk about the commodities market once again. Manisha Gupta is now joining us. Manisha, morning again.
Morning again, Anuj, and I'm looking at the metal prices where we have seen declines continue today. The selling started in the New York session and LME has seen a decline. Shanghai markets have seen a bit of a buying coming in, but overall it is a picture of a loss here. Even as we are looking at US dollar on the weaker side, but that hasn't helped. Markets are reacting to the weak China trade data where the export numbers at 27.9% is lower than the estimate and lower than the month of April as well. For copper especially, we are now trading at the lowest level in 5 months. We did see $10,800 of an all-time high. The prices have now slipped below 9,900. Also, there were some supply concerns from Chile, but the latest report suggests that even as there are wage strikes happening there, the output has continued to be normal. And that is a chart that tells you on how the copper prices essentially have behaved in the last week, where we have seen 3.5% of a decline, 5% cut in copper prices in last 1 month. On a yearly basis, of course, most of these metals are doing quite well, but the last week, the last month hasn't been so great for many of these metal prices. This is essentially after those Chinese statements as well. But the markets will clearly shift focus now to the US inflation data. That is a big number to watch out for ahead of the US Fed meeting on 15th and 16th of June. The focus also would be on the monetary policy meetings from Canada and Europe. That also falls on Thursday itself. Trading strategies then, and I spoke to Kuberji Group. They have a buy call in natural gas. That one is trading at a 4-month highs in the international markets. Upsides of 227 is what you can expect on that. They also have a buy on aluminum. Actually, aluminum is the only metal that actually is trading flat. Everything else is trading 0.5 to 1% on the weaker side. So a buy in aluminum with targets of 193 could be on charts.
Okay, well, we'll do one thing. We'll take a short break. Thanks, Manisha, for that. When we come back from the break, we'll focus on the logistics space. Concor has signed a 35-year lease agreement with the Indian Railways. We'll speak with V. Kalyanarama, the chairman and managing director of the company, in just a bit.